Happy Thanksgiving, everyone. Welcome to Charts and Coffee Thanksgiving edition. Hope everyone is doing well. We kick off our, oh, there's the camera. Let's try this again. Yeah, computer, my camera crashed. Sorry about that, gang. Toss is getting restarted right now. We should be good. Yeah, my computer apparently doesn't want to work on Thanksgiving. I don't. Hey, gang, sorry about that. The camera crashed, so I had to re-enter. All right, so let's kick this off. So this is our Thanksgiving episode where we're going to take a look. Obviously, the equity markets are closed, but markets are not closed worldwide. I mean, once upon a time when I did a lot of Forex trading, and again, yes, happy Thanksgiving, gang. I know I came on and disappeared. The camera decided it does not want to work on Thanksgiving. It wants to go enjoy. I do Thanksgiving breakfast, so we start in this house at breakfast time. So breakfast Thanksgiving in the Horner household consists of some sweet bacon burnt ends and some pecan apple pie. I think they call it the Levy High pecan caramel apple pie. So that's how we roll for breakfast here. All right. So great to see everyone. Great to see everybody. All right. So happy Thanksgiving, gang. So let's get to it. Why the Thanksgiving look at the market? Every single morning, I think the routine of just making sure I've got the pulse of what's going on is really important. For me, it's a matter of one, just habit, right? I really, even on Sunday, I'll take a look at what's going on with price action. And, I tell you what, I love the art and skill of trading and just taking a look at the chart every single day, just a little bit of time is what I love. I know a lot of folks like to optimize for, whatever, the lifestyle. To me, trading is the lifestyle. Trading is not the means to the end. Trading is the end. That's what I love to do and effectively. So if y'all are here on Thanksgiving, you get that, right? This isn't about, hey, can I put my trades on and go have a picnic? I love this process. I really love what's happening right now. So as always, gang, if you have any questions, type them on in. We're going to take a look at 5 different sectors. If you're looking at the Dow, S&P, and NASDAQ, you're looking really at a group of stocks. And I know that sounds really obvious, but you're really looking at a group of stocks that are weighted disproportionately. I think a lot of folks know that, right? You're looking at a group of stocks that are weighted disproportionately, which is to say, if I'm looking at the NASDAQ, we know this is tech, right? We know this is the Magnificent Seven, etc. But what it is XLK, which is Apple and Microsoft, XLC, this is communications, by the way, which is Meta and Google, XLY, which is Amazon and Tesla, and then finally SMH, which is NVIDIA. And there's your Magnificent Seven, represented by 4 different sectors, all of which you can think about as cylinders in this engine, this motor that we call the NASDAQ, right? So the NASDAQ isn't moving because the NASDAQ is moving. It's because the individual stocks, or even if you want to get down to the sector level, however you want to look at it, they're what's powering the index higher or lower. And those sectors don't have equal weighting either, right? These sectors also have disproportionate weighting. XLK alone is enough to carry the NASDAQ, right? XLK alone is enough to carry the NASDAQ. So if you've been noticing that XLK, XLC have been moving higher, while the likes of Amazon and Tesla have been a little bit of a mess, especially Tesla, gang. I get more questions about this stock. I'm going to say something. I'm going to go full heretic. I could care less what Tesla is doing. I really could. Tesla is very much kind of a culty stock. I get the appeal. I'm not saying it's not interesting, but it's a culty stock. It's one of those stocks that everybody wants to know what it's doing because once upon a time, probably in 2020, it paid off a lot because of the stock split and because of being added to the S&P, right? Of course, stock splits can happen again, but not at 200 and change. And it can't be re-added to the S&P. So the phenomena that made Tesla so great, no offense to Kathy Wood, but ask Kathy Wood, the thing that made Tesla so great in 2020, one out of those 2 things can't happen again, right? So this is an interesting stock that's lumped into the Magnificent Seven, which frankly hasn't been helping the S&P or the NASDAQ, right? And if I'm looking for relative outperformance, it's not going to be there. I know, Rog, you're going full on salty with Thanksgiving. No, not at all. What I'm trying to say is focusing on our favorite stock is not going to get us to our goal. Focusing on not just outperformers, but relative outperformers will get us to our goal. So you might say, okay, Rog, what does that mean? Let's start with the indices. What are the relative outperformers? And by the way, gang, if you have any questions, feel free to type them on in. I see Jack has a question about XLV. Yeah, we'll get on over there in a moment. But I think, Jack, you're going to see, and I was thinking about your question as I'm kind of putting this together here. When I'm looking at the NASDAQ, we talked about XLK, XLC, XLY, SMH. When I'm looking at the S&P, which is from a relative performance standpoint, second to the NASDAQ, the strongest sector out there, gang, because it has is XLK and XLC. I put SMH in there too. So that's going to disproportionately assist the NAS. The second strongest index is S&P because XLK technology and financials, XLF, have come on strong, right? As we go from October to November, financials, think Berkshire, think JP Morgan, Bank of America, Wells Fargo has crossed through the 200, is surging higher. And not since August have we seen an uptrend. And here, as we wrap up November, looks like it's going right back into an uptrend. Now, when those two sectors, XLK and XLF, when K and F are moving together, S&P has a chance to keep up with the NASDAQ and maybe even outperform it. Now, you might say, okay, Rob, what about Jack's question here about the XLV, right? Here's the thing, gang. This is really not a sector you want to spend too much time on. Here's why. As we're going into the last month of the year, XLV has yet to get above. Take a look, that 200 propulsion. And you might say, yeah, Rob, what's going on inside XLV? What's so terrible in healthcare? I'm going to show you all right now. Take a peek. This is what I call a multi-chart. Many of you that are already part of the Sector Secrets Mastery, you're already familiar with this view. Take a look at UNH, uptrend. What else is in an uptrend? Nothing. All right, then we go to the next level. What's above the 200 propulsion? Lilly and Amgen. Those are both neutral. What's in a downtrend? AbbVie, Pfizer, BMY. What's below the 200? Merck. Abbott's testing it right now. So when we think about the different components, think of the XLV as having basically 5-6 cylinders. What are the heavily weighted stocks in here? You could even reduce it to 2. The 2 main stocks at XLV are UNH and Johnson & Johnson. If I don't have leadership from the top 2, top 3, top 5, it's tough for this sector to keep moving. And you can see where it's stuck, right? Right at that 200. So I'm not super thrilled about where XLV is as we're going into the last month of the year. The other thing that I want to take a look at is, let's do this together. I'm actually going to show you another thing that I like to do this time of year. And by the way, gang, I discussed a lot of this I did a big, 16-minute video because I figure, hey, folks have some time between now and the reopen on Friday. Folks have some time, and why not kind of lay some bigger picture ideas out? Where did we start the year? All right, where did we start the year? And I'm going to just zoom to the first of the year. So I really want to look at the January 3 close. That was the first trading day of the year. So let's go ahead and do that. So there's my line that says year. Let's go to Jan 3, which is right here. And the close was 135.46. So when people ask, are we up and down on the year? Look, a lot of times you'll hear traders talk about percentages. Gang, I could be less interested about percentages. I'm not interested about in how many percent an equity market is up or a stock is up or down. I could care less about percentages when people talk about their profit. Talk points, talk positive, negative, talk dollars, right? If we're looking at XLV here, this is down on the year. By how much? Well, you can see where we are versus where we opened. If traders are wondering, as we go into the last month of the year, is this a relative outperformer? It's not. The last month of the year is not about bargain hunting. The first quarter of the year is. The last quarter of the year, the last month of the year is strength gets stronger, weakness gets weaker. So for any number of reasons, does everyone see why XLV is just a no-go? Right? Now, if I do the same thing with XLF, you'll see it's crossed certain levels. If you do the same thing with XLK and the NASDAQ, they're making higher highs, right? So as I was saying, if you haven't checked out yesterday's video, you head on over to the Simple Trading YouTube channel. And I think I called it, do these 3 things. Do these 3 things. And what I'm going to be doing going into the end of the year. So XLV is not going to be something in terms of a cylinder that's going to power the Dow, power the S&P higher. And the NASDAQ, by the way, does not give a rip about what's happening in XLV. But let's go to the second part of the question. So if the Dow is double green, to your point, Jack, if the Dow is double green, let's go back to the cylinders. Can the Dow be something that I would prioritize? It really isn't. right? It's certainly up on the year. It's above the 200. It's doing all the things that are generally in the bullish hemisphere, but it can't hold a candle to what the S&P is doing or the Nas, which are very close to, well, the Nas is going into an uptrend. The S&P is trying to go into an uptrend. The Nas is making new highs on the year, and the S&P is not too far behind. And it's going to benefit from that tech weighting. The Dow is not too bad. Dow is not too bad, don't get me wrong. But you might say, Rod, can the Dow move higher without healthcare? It can, and it has, because the number one weighted sector in the Dow are financials. And if financials can continue to go, if tech can continue to go, these two sectors benefit the Dow. But the way that the S&P and Dow are similar is the way financials and tech are weighted, but the order is flipped. So the Dow is financials first, tech second. The S&P is tech first, financials second. And that's why the S&P is keeping up more with the Nas, because of the high concentration weighting of tech. So do we need healthcare? Do we need transports? Do we need industrials to move higher? We actually don't. That's great. If they do, fantastic, right? Are we up on the year in industrials? Are we up on the year in transports? Take a look at transports here. Above the 200, above the beginning of the year. This would not be a tax loss harvesting candidate. Russell may be, regional banks may be, healthcare could be, right? What's down on the year? What's below those key levels? And what is perceived as weak relative to other sectors? So that's the way we want to think about how this last month of the year behaves. Strength gets stronger, weakness gets weaker. And then that's how I measure strength. Where are we on the year? Where are we in relation to the 200? And if we start with that, every time we're looking at what the likelihood is for continuation, especially this month, well, I should say, especially December, we'll be in good shape. So I mentioned there are three phenomena. If you check out that video again, set aside 15, 16 minutes, gang. It'll definitely be worth your time. But just to give you an idea, if you look at three phenomena in December, number one would be the window dressing, which is the strength gets stronger phenomena. Number two would be the weakness gets weaker phenomena. That's kind of more along the lines of tax loss harvesting, right? Russell is above the year level, so it's up a little bit on the year, but it's still below the 200. So it's the most vulnerable of the four indices: Nas, S&P, Dow, Russell. It's the weakest, relatively speaking. Traders will notice NASDAQ's going to continue to benefit. Russell might get a little wobbly because mostly KRE. Then I look at where KRE is in relation to the year. KRE is a dumpster fire, right? Does anyone want to load up their December look, right? The portfolio that ends the year. Does anyone want to present to their clients, hey, look, I've bought regional banks for you. And the client's going to say, isn't regional banks, that sector, about the weakest sector of 2023? And the guy's going to go, yes, but think about it. It has the most chance for an upside. I'm not going to put you long at the top of a trend, high of the year, like in NASDAQ, which would make sense if most investors and retail traders understood what they're doing instead of watching TV for 30 minutes and thinking, oh, I tuned into fill in the blank station and I know what's going on in the equity markets, right? You all know that's laughable at best. However, that would probably make the most sense, but that's not window dressing, is it? Investors who are letting someone else manage their money say, hey, am I in the NASDAQ? NASDAQ's at the high of the year. I heard fill in the blank chucklehead on television tell me NASDAQ's at the time, is at the top of the, range. It's moving higher. Do we have exposure there? But they seldom ask from where, do they? Cost basis matters, doesn't it? So this is where I say KRE not going to benefit from end of year, but Q1 looks great because now that money manager has 12 months or at least a quarter to start finding relative outperformers. And this is where you're going to notice if anything's going to get hammered for a little bit, retracement, mean reversion at the beginning of the year, it's going to be the scorching hot NASDAQ because money is not going to flow into things at the high of the year. Those are things that retail traders do, gang. Uneducated retail. I'm a retail trader, by the way, but that is what uneducated retail traders and investors do. They chase higher highs. That is not what as we like to call it, big money or smart money. That's not what they do, right? Not at all. Does that make sense? People think, oh, Rog, salty. No, it's just the truth, right? And so that's where, I kind of gave y'all a little insight into what yesterday's video was, but that's where we really got to focus on where the relative outperformance is. And that's, and kind of in terms of the question with Jack's question with healthcare, that's where I'm not too keen on healthcare, but I love financials. We love those four main sectors in the NASDAQ, and we want to focus on where the strength is right now. Now, we're going to flip that on its head come next year, right? Okay, question here from Delta who asked, TradingView extended trading hours look different than regular? Of course, it's different hours, right? It should look different. It's the difference between 9:30 and 4 and then all the other hours around it. I use extended, correct. I use extended. Do these different structures mean different strategies? No, Delta, they don't. Here's two reasons I don't like RTH. RTH starts at 9:30, which means my indicators are not getting a running start into the bell. That means the first open, high, low, close of the bell is the first opportunity that my indicators have to calculate since 4 p.m. the day before or the session before. I like extended hours. So even though the price action might be sporadic and low volume, I like having my indicators giving them a running start. So yeah, of course, regular trading hours are going to look different than extended. It's a completely different time window, right, Delta? That makes sense? Cool. All right. Next up is, hang on, gang. Yeah, by the way, I don't know how much longer we have the Black Friday sale going on, but yeah, absolutely. You can grab the mastery, you can grab my tools, you can grab everything but my most recent class, I believe, with that Black Friday sale. So gang, whatever money you can save on your education, on your tools, and put that money into your trading account, I am all for it. Use the sale. It's a really, really good one. All right. Let's see here. Kirby asks, I only purchased the Darvis lines a few days ago and noticed your lines seem to extend further to the left than mine. Oh, you're on TradingView? Yeah, Kirby, it's the difference between ThinkScript and PineScript. So your TradingView lines are going to look a little bit different. They're the same lines. They're the same lines. They are going to look a little different. On TOS, I just extend it until the next set comes. And I don't believe that's something we can do on PineScript. But I'll touch base with Lornabot. So if you want to maybe nudge me next week, early next week after I talk with her. But yeah, they're the exact same levels being plotted, but the way they extend, correct, is a little bit different, but the levels are the same. All right. Okay. NVIDIA. NVIDIA is a name that obviously it's an SMH name for the most part. It's one of the Magnificent Seven. It had a pretty big sell-off on the heels of earnings. This is why the day before earnings and the day after or 2 days after, I like to leave a stock alone. Overall, earnings has not changed the trend of NVIDIA. So come next week, I don't know that I'm going to do this on Friday, but come next week, we can go right back to focusing on possible daily price movement range buys in NVIDIA and look for more upside. I mean, it's part of those cylinders that are firing. It's part of the NASDAQ. It looks great, I'm with you. I just want to give it a little bit of time to simmer down after earnings. Okay. All right. Hope. Love Quit, the book I recommended some time ago. Maybe I discovered something valuable to read recently. Quit is fantastic. I mean, if I did nothing but read Quit all year long, that probably would be more than enough. I'll tell you what, I just got back from a writing workshop with one of my favorite authors. And I got to tell you, I've been enjoying this one. I've read it once before, but the guy who helped Andre, and I'm trying to think of it. Oh my gosh, he wrote The Tender Bar. If y'all haven't read that before, hang on, I'm trying to think of this guy's name. He does a lot of the ghostwriting for a lot of authors, and I think his name is J.R. Oh my gosh, what is his name? J.R. Moringer. He helped Andre Agassi with this Open. I'm enjoying the heck out of Open. If any of you were tennis fans during really the heyday of American tennis, Sampras, Agassi, um, what an interesting time, and what two amazing tennis players. But yeah, I'm absolutely enjoying the heck out of this. And Moringer did a really good job helping Agassi along, and I'm enjoying that right now. Does it have anything to do with trading? Not a darn thing that I can really tell. But anyone who's trying to be the best that they can be at something, I guess then yeah, it does have some relevance to trading. What are the trials and tribulations along the way to be the best at whatever it is you've tried to become, right? So I'm really enjoying Open. Sometimes I try not to read things that are oriented to how to fill in the blank, right? I love biographies. So if I'm not reading, Malcolm Gladwell, Annie Duke, these things about probabilities and psychology, if I'm not reading that stuff, I love biographies. Walter Isaacson knocks it out of the park with those. The guy who did, oh my gosh, I just picked up Titan. What is his name? The guy who did Hamilton, the guy who wrote the Hamilton autobiography that the play was based on. I'm trying to remember his name. Oh my God, Chernow. I think Chernow, Ron Chernow. He wrote Titan. He wrote Alexander Hamilton. I'm actually going to probably do some biographies as I wrap up the year. So yeah, probably a lot of biographies in the next month or so. Hope. Thanks for asking. Yeah, well, I gotta get the Raghee's bookshelf. I gotta get the Raghee's bookshelf show going. We will. I've been talking about that for years. That we'll get a Raghee's bookshelf. Clearly going one of these days. I think reading has definitely helped me become a better trader, no doubt. All right. What else do we have here? And by the way, some of the tech questions that y'all have asked, the Lorna Bot is in the chat. And I think Kirby, Lorna Bot has hit you up there about the Darvis lines. Yeah. So thank you as always. Green Eggs and Ham said you had your coffee and pecan pie, all sugar. Yeah, we're doing round one of Thanksgiving here. I start with breakfast. I did some sweet bacon burnt ends, and those came out of the oven about an hour ago. And we're doing I think it's a Levy High caramel pecan apple pie. The thing's about 8 inches tall, and then you drip the caramel pecan over it, and then it's got these sliced apples that go. Oh, it's incredible. So that's breakfast. That's where we're starting here in the Horner household. All right. Let's see what else we have here. Mike, I agree. Are we going to see some tax loss harvesting in bonds? I absolutely agree. I don't know that it's going to be as pronounced because, Mike, we've got this push-pull now of, on one hand, yes, we are down on the year. We can see the tax loss harvesting roadmap from October. I agree. However, the more that we are expecting, so this is the flip side of that same idea, Mike, the more that we are expecting 1, if not 2 rate cuts by the July 31 meeting, it is going to be difficult to be too bearish on rates. But I agree. When I look at bonds, whether that be ZB, ZN, TLT, IEF, and all these different bond funds, the way I would treat this is let's look for December to be weak for some tax loss harvesting. Weakness gets weaker, right? It means the same thing. Going into Q1, I'm going to look to get long bonds. If I can find a daily or weekly setup that gives me some time horizon because the macroeconomic wheels are turning in favor of lower yields, I'm with you. I think that tax loss harvesting is going to give traders some interesting shorts. And then moving into Q1 2024, longer term, it's going to give us some interesting buys. Yeah, I agree. All right. Am I trading today? Gary, I am not trading today. I will be cooking, reheating, cleaning. I will be looking at charts, but I will not be trading. If I was, Gary, the only thing that I have traded on Thanksgiving is typically Forex, and I'll do that till about 11 a.m. Eastern. So if I was going to trade this morning, I could start as early as really I want to, 2, 3 in the morning or Eastern, and I'll go to 11 because that allows me to take advantage of 2 parts of the world that don't give a rip that it's Thanksgiving, right? We're talking Europe and the UK. So there are markets that are moving today, right? This is a US phenomena. Forex is how I would do that. But I'd stop at 11. That's the London fix. And that's, for the most part, the winding down of that Paris, Frankfurt, London session. So definitely would not be doing futures. Would be open to Forex, but I'm doing neither today. All right. As far as, I would add bonds. Russell is going to be in an interesting spot, Mike, because it just ticked up positive on the year. But if Russell is, if regional banks are sensitive to the tax loss harvesting, to your point, if bonds sell off at the end of the year, then perhaps small and mid caps will follow suit like they did the end of October. I'm with you. I think regional banks for the most part. And if regional banks start to sell off, regardless of whether the Russell is up on the year or not, it will drag that small cap index lower. Yes, agreed. Anthony asks, how do I get the green and yellow bars with the slow stow in TradingView? It's a multi-trend indicator, Anthony. If you're part of the Sector Secrets Mastery, the Lorna bot can help you out. So do that on Friday or Monday. Let us know. And then it's a custom indicator. Yeah, it's a custom indicator. But if you're in the mastery, we do have the multi for members. Yes, there's a number of premium tools that I make available to members of the mastery, and that happens to be one of them. Yeah. All right. Next up, let's see. Hey there, MX. Thank you. And the Lorna bot. Yeah, gang. Look, speaking of being thankful, I sit here in my office, me and my books, and I do my thing, right? But there's two people that make sure that our room and our service and our indicators are at just the highest level that I'm able to muster. And that's the Lorna bot and the Trish boss. And, I've got such a great, I remember, and I know exactly. So Sting one time, I remember who's a fan of the Police? Y'all remember the Police? Love that band. And Ghost of the Machine is probably one of my favorite albums. And Sting one time said, I get to head up the greatest band in the world. It was a trio, right? I get to head up the greatest band in the world. So Sting singing, playing his bass, and then he's got Andy on the guitar, just shredding. He's got arguably one of the greatest drummers ever, and Stuart Copeland behind him. He goes, I've got the greatest band in the world, right? That's how I feel, right? I've got Andy on the guitar shredding. I've got Stuart on the drums, absolutely, playing his heart out, and everyone just notices Sting, right? But I've literally got the greatest band in the world. So very grateful for the Lorna bot. Very grateful for the Trish boss. It definitely doesn't happen by itself, right? The Trish boss has been with me now for a decade. And the Lorna bot's been with me now about Lorna, what's it been? 2 or 3 years? So I literally have the greatest band in the world. I am a very, very, very lucky person. So thank you. Thank you, MX. I definitely don't do it by myself. And kudos to you. MX, I'll tell you what, every time one of our members says, hey, Rog, what my favorite thing is? When traders say, Rog, who is it that does all your entity creation and tax stuff? And I tell them it's Anderson Advisors. They created my entities, not only for tax purposes, but also for, asset protection, all that stuff. And they say, I need that information. I said, oh, cool. I said, what's going on? They said, I got to pay taxes this year. I've made money trading and I got to pay taxes. I said, congratulations. That's awesome. Right? So I always tell traders, look, I can sit here and be salty and sound like a heretic and a contrarian and all sorts of things, but it's you all putting in the work saying, you know what? I'm not going to subscribe to the groupthink like the rest of the sheeple, right? I'm going to do something different. I'm going to listen to this crazy woman who caffeinates herself and gets on YouTube every morning. I think it's making sense. I can talk till I'm blue in the face. And since I'm pretty tan, that'd be a lot of talking. However, you all are the ones saying, hey, I think I can adopt a different way, and you're putting in the work. So if I am some part of that, my friend, great. But it really is you doing all the heavy lifting. So, remember, you did this, right? You did this. And if you turn the corner, you can keep accelerating, right? So congratulations. That is awesome. When do I use the wave and when the DPMR and swing trading, or I use them only in conjunction? Stone Castle Project. two cool tools for support and resistance. What I try to focus on with the wave is in a trend only. So NASDAQ or any green multi-trend is a candidate for trend trading. Daily price movement ranges, the gold and gray zones can be used in any environment. If I have a neutral environment and an oversold slow stochastic, like we did back in here at the end of October, that I can use the gray zone. If I have a trend, I can use the wave, the 34 EMA wave, and the daily price movement range. So it really comes down to Stonecastle. It really comes down to the underlying market structure. And I hope that makes sense, because everything is structure dictates strategy, right? And so strategy could be wave versus daily price movement range, correct? It could be the difference between being open to a gold zone put or a gray zone call. So, but the structure is going to be the deciding factor, right? And can we use them together? Well, in a trend, absolutely. In a trend, yes, because then the wave is valid and the daily price movement range, of course, is valid. Yes. So great question. Great question. Thanks, Green Eggs and Ham. Like I said, if y'all didn't show up, I'd be talking to myself and maybe my dog every morning. So thank you all for, this is 3 years we've been doing this show. As of October, this is 3 years we've been doing this show. So y'all come, y'all are coming in by the hundreds every single morning. And that's why I'm here, right? We've been doing this for 3 years now. So probably got about, 600-700 shows now. Very cool. All right. I thank you all. Otherwise, like I said, I'd be talking to myself. These books don't talk. These books don't talk back. Right. SJ says, I missed a recent dip to buy Magnificent Seven. Do I expect them to continue their run or pull back to buy for a run into next year? SJ, here's what I know. And it sounds like I'm splitting hairs, but this is the only answer. The only thing I can do is buy a pullback. Whether or not they pull back, I'll tell you what, SJ, nobody knows. What I can do is all I can do. What will happen is up to the market. So I never try to go into prediction mode. A lot of folks went into prediction mode in 2023, right? There are all the bears who are now suddenly bullish. The end of the world is coming, but now end of the world's not. That's prediction, right? Waiting for your pitch is trading. And so, SJ, I don't know. Nobody knows. However, if it were to happen, you mentioned Magnificent Seven. If it were to happen, then absolutely, I'll do it. So it's more like, and I know a lot of you have heard me talk about this analogy. SJ, you and I, my friend, we are a big league hitter. We are a baseball player. We're at bat. I used to keep a baseball bat on my bookshelf because I always remember I'm the batter. I'm not the pitcher. I'm not the catcher. I'm not the ump. I am the batter. And I'm sitting there at the plate. I'm watching the pitcher and I'm waiting for my pitch. I'm not swinging at everything that comes by. I'm waiting for my pitch. I know the pitcher is going to throw something at me, right? I know something will be thrown. The pitcher is the market, right? So it's my job to discern whether that pitch is something I can use, I can swing at, right? So I know that we'll get pitches. I don't know what that pitch will be. Therefore, I don't know if I can do anything with it, but I know a pitch will be thrown at some point. So as far as what's going to happen, not a clue. I don't any sooner know what the pitcher is going to throw at me than what the market's going to do. Does that make sense, gang? And it's a mind shift. It's a mind shift that mindset shift that most traders never make because they're still running around asking, and that's not at all what you're doing, but most traders, SJ and everyone here, are still asking, what do you think's going to happen? And I'm thinking, is this a grown adult asking another grown adult what's going to happen? Do people really think others can see the future? And in the equity markets, not only do people think that's true, even more ridiculously, they think someone else knows. And even more arrogantly, they answer, I don't know what's going to happen, right? I never have. Luckily, the powers of prediction have never been a prerequisite to being a successful trader. And so I try to keep that in mind, right? Am I waiting for the pitch or am I somehow predicting the pitch? I'm not going to predict the pitch, right? So I would say if we get the pullback on Apple, if we get the pullback on Meta, if we get the pullback on Google, anything that's green trend, SJ, you and I, yeah, I'm all for buying them. I am 100% with you. It makes absolute sense to do that. Yeah, it makes absolute sense to do that. All right. All right. How does the Darvis and the DPMR differ? Calculation, Ren. One is price-based. The Darvis is a price pattern, and DPMRs are volatility-based. They're both support and resistance. And I love that you said that, Ren. They are both support and resistance, but Darvis is based on price action. It's a price pattern, and Darvis is a historical volatility zone. Yes. Okay. All right. Let's see. John says, I am reviewing the decoding volume class. Awesome. I think that in the notes you stated that the pre-New York Open is a good session to trade futures. So 7 to 9:30 is a window. I don't know if it's my favorite, but John, it is a good window. So if y'all are looking at futures trading before the bell, I'd say 7 to 9:30 is a good pre-market window. It doesn't mean that's what we're going to see from 9:30 to about 10:35, but it is a pre-market window for futures. Anything to note when trading before the New York Open? Yes, John, hot zones, because some of the most impactful data that we have to deal with as investors and traders are 8:30 a.m. releases, CPE, PCI, non-farm payroll, right? Some of those big initial claims, some of those big job and inflation metrics are released at 8:30. So a full hour before the bell rings. And I would say if you're going to trade between 7 and 9, focus on making sure you know where those 8:30 hot zones are, because they can blindside you. Yeah, they can blindside you. Hey there, Rainy Days. Hey, I love having you here. Love having you in the room. That's fantastic. Green eggs and ham. Do I have a high portion of my portfolio in treasuries? No, I do not. I do not. When you say, do I have a portion? Oh, do I have a portion? Yeah, I have some. But again, it's cost basis, right? I mean, remember, my portfolio it depends on which one we're talking about. I have 5 different ones. Some of them have been built over the last 5-6 years. I've been managing my mom's for over 30 years. So it depends on the cost basis. So green eggs and ham, I could say yes, but that doesn't answer the question, right? Everything is cost basis. So my more recent portfolios, no, not as much. All right. Okay. All right, gang. I think that's it. All right. As always, thank you so much, gang. Thank you so much for putting in the time and the effort. Discipline, right? Discipline, determination. Don't let anyone tell you can't be a trader. You're going to hear all the naysayers all the time. I hear it when people say, oh, you can't make money buying calls and buying puts. I've got about 800 plus members who are doing just fine. Thank you very much. Doing exactly that. Don't let anyone tell you what you can and can't do, right? And when it comes to trading, that's all I can speak about here. When it comes to trading, this is doable, right? But remember, listen to folks who are trading the way that you want to be trading. Don't take advice from folks who are not doing what it is that you want to be doing, right? I'll give you a great example. When I first met John Carter, he was already trading at an elite level, and I was trading well too, but he was trading better than I was. I wanted to know how he was trading, right? When I got to meet some of the legends, right? Linda Raschke, you better believe I listened to what she has to say, So when you are getting advice from other traders, make sure they're trading in a way that you aspire to be trading and are doing it well. Because a lot of folks out there giving advice that aren't doing well, and they're not trading in a way that necessarily you want to be trading. So remember, gang, be very careful who you let in. Stand guard at the gate of your mind. I've got a book on my bookshelf here that I want to get to, which is called Your Brain is Always Listening. Be careful who you let in. Be careful about opinions. It's easier to shut things out. Less is more, believe me. And I appreciate y'all spending time with me here every morning for Charts and Coffee. Thank you all, as always. I'll see you tomorrow, Friday, for Charts and Coffee and our half day. We do have some data coming out at 9:45, but for the most part, y'all know it's the real holiday this week, Black Friday. But remember, tomorrow will be a very low participated session. But it has a lot more to do with the fact that the equity markets can't be closed for a certain period of time. So we end up opening it for a half day, which is really going to be a throwaway session. But nonetheless, it'll be a great time to catch up for Charts and Coffee. I'll be in the Sector Secrets Mastery. And for those who are saying, Rog, I've been wanting to check out the Sector Secrets Mastery, see what you're doing in there. Gang, do it during the Black Friday holiday because it's going to cost you 30% less. All right. So if you're wanting to come kick the tires on what we're doing, get a number of the free indicators we make available to members. We are in their session daily. We meet every single morning, and we have, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions per week. Yeah, I'm trying. Am I getting that number right? 2 text sessions, text session, ask me anything session, bot scalping session, and then day trading and swing trading with me every day. Oh, and as well as our weekly portfolio and position sessions. We got a lot going on in that mastery. If you've been wanting to check out what we're doing, hey, you know what? Come check out and see if it's right for you and do it while it's on sale. That's what I'll say. Okay, gang. Have a great one. Happy Thanksgiving. I'll talk with you soon.